Let's have two illustrative income statements of Islamic banks. The first one is the income statement of an Islamic bank from Qatar. And the source of this presentation is also from the IOF. As we all know, the income statement is a formal statement which shows the results of operations of an Islamic financial institution. In this way, you're presenting, the Islamic Bank is presenting the total income from financing and investing activities, and the income from fees and commission are presented separately, and the commission expense, the fee and commission expense is deducted from the fee and commission income, because this way you're presenting is the same as the conventional bank where the interest expense is deducted from the interest income to arrive at the net interest income. So in this case, the net fee and the commission income. Then, of course, it presents the foreign exchange gain or loss. And in case the bank is also engaged in investment in associates and joint ventures, then we need to present the share of results from such investment in associates and joint ventures, then the other income, then the total income. Then the costs and expenses should be deducted from the total income, like the staff costs, the depreciation and amortization, the finance expense, and the other expense. Then we have the total expenses. Then after the total expenses, then the impairment loss. The net impairment loss on investment securities, for example, and the net impairment loss on financing assets. Then we arrive at the profit or loss for the year before return on investment account holders. So before return to investment account holders. As you can see here, I'm presenting one of the notes to financial statements so that we are acquainted with what are those income from financing activities. Normally, this refers to revenues or income or gain derived from the Islamic financing products like the murabaha, the musawama, the mudaraba, etc. And another notes to financial statements why with respect to income from investing activities. And as you can see here, it's the same as the corporate business, or in the case of other conventional banks where you can see investments from available for sale investments, the held to maturity investments. So the same as the Islamic Bank, where you can see, like, for example, income from interbank placements with Islamic banks, income from investment in debt type instruments, the net gain or loss on sale of equity type investments, the net gain or loss on sale of debt type investments. Why like this? Because normally Islamic banks are engaged in equity and debt investments. Then the dividend income, the fair value gain or loss on investment securities, carried as fair value through income statement. This is the result of fluctuation in, for example, in stock price per share and others. And just to continue presenting the income statement, once we arrive at the profit or loss for the year before return to investment account holders, then we need to present the return to investment account holders before the bank's share as mudarib. Then the bank share as mudarib, then we can arrive at the net return to investment account holders. Then we have the net profit or loss for the year before tax. And in other jurisdiction where there is also zakah, we can arrive at net profit or loss for the year before zakah and tax. Then the tax expense. And in case of zakat, then the zakah must also be presented or disclosed. Then we arrive at the net profit or loss for the year after tax expense or after the zakah expense. And the same as the conventional financial statements were for presentation purposes, for good presentation, and to inform the user properly, we need to segregate the net income or loss for the year attributable to equity holders of the bank and the non-controlling interest. Then the calculation of the earnings per share, such as the basic earnings per share and diluted earnings per share. And we are really familiar on how to calculate this basic earnings per share and the diluted earnings per share insofar as CPAs or accounting practitioners are concerned. So this is the first way or the first format in presenting the income statement. Another way of presenting the income statement, like for example in this Islamic bank presentation from Bahrain, and the reference of this format is also from IOFI, where you can see here the income, where the total income is classified into deferred sale and the investments. And the investments here, that includes also the normal investments of banks and the financing assets. The deferred sales, I believe this refers to the murabaha, because in murabaha, there is also what we call deferred murabaha. Then we have the return on unrestricted investments, the same as the presentation before. Then the bank's income from its own investments, the bank's share in restricted investments, profit as mudarib, bank's fees as an investment agent for restricted investments, revenue from banking services, and others. Then the total bank revenue. Then after the total bank revenue, of course, the expenses, the administrative and general expenses, depreciation, and amortization. Then net income or loss before zakah and tax, provision for zakah, net income before minority interest, then minority interest, then the net income. So the source of this presentation is also IOFI.